Folks, it is Fed Day. It is Fed Day. We're going to figure out what the Fed will do with interest rates. Nothing. We're going to figure out where the dot plots are. That's going to be where the excitement is. Are we going higher? Are we not going to cut rates all year? Where's GDP? Where's unemployment? Where do these 18 individuals think the U.S. economy is going? Are they going to continue the higher for longer? Are they going to talk about a recession? I don't know, but today will be interesting. I believe the fireworks start at 11 o'clock with the announcement and then 11:30 with the questions. Those times are Pacific. Add 3 hours for Eastern. On top of that, we've got a lot of other stuff to talk about today. We've got some updated housing data from Altos Research. We have economic forecasts from Goldman Sachs and Vanguar. And I want to highlight the importance of understanding average and median, because there's a lot of economic data, a lot of housing data that gets put out there. And sometimes if you don't understand average or median, you could really misinterpret the data. So I'm going to give you some samples of average and median net worth by age, and you will see a huge difference. So folks, let's get into it. Let's first talk about some research from Claros Group. Claros Group is someone who has analyzed 4,000 banks. Folks, they've analyzed 4,000 banks. They are basically looking for cracks in our financial system. According to their research, there are 282, so what's that? I don't know, a couple of percent. 282 institutions that have problems, and problems are defined as large concentration of commercial real estate and large unrealized gains. Thanks to Dividend Dave for the super chat. Much appreciated. Again, so 282 institutions. The good news is most of these 282 are small. There is only one bank with over $100 billion in pain. And they didn't name them, but it was very clear that it was New York Bancorp when you looked at the data. So again, what is Claros Group saying may happen to these 282 banks? They basically highlighted that over the next several years, they will likely have to raise capital. Much like New York Bancorp did. New York Bancorp raised $1.1 billion. So again, we may have some consolidation, we may have some acquisitions, or just all-out raises of capital. So I found it interesting. If you would have asked me just to randomly guess, if we did 4,000 banks like Claros Group, I probably would have been significantly higher than 282, right? I would have thought the concentration was a little bit more, and the unrealized losses is kind of a double whammy. So I would have expected it to be much higher. And again, remember, there's only one of the 282 that are of size. So not really the banking crisis that maybe I thought was coming. So again, we will get through that. Let's talk about active inventory. Folks, if you're not following Altos Research, for all the latest and greatest data that is going on across the country, you are truly missing out. Mike Simonson and the team there do a wonderful job. Last week, inventory continues to rise. Yes, folks, we are in the spring selling season and active inventory is rising. That is a good thing. Active inventory was up 1.3% to a total of 507,000 single-family homes. That is up 22% year on year, and I found it shocking. It's up 105%. 105% in 2 years. Yes, folks, the active inventory has doubled from the depths of this crazy market. Remember 2 years ago? I think that was the end of the 3% mortgages and the end of the crazy bidding. But yes, active inventory up 1.3% week on week, 22% year on year, and 105% over the last 2 years. What we are seeing is new listings are coming, 59,000 new listings last week. We did see 16,000 of those immediately go pending. Median price, $435,000, up 1.2%. What I found interesting was actually pendings. Pendings were up 345,000. They were up 66K up to 66K, up 15% from last year. So again, we're getting 1% more active listings, but pendings are up 15%. So again, rates matter. We are seeing the spring selling season go. So very, very interesting. Next up, let's talk about what Vanguard and Goldman Sachs are. We'll go to Goldman Sachs first. Goldman Sachs top economist Jan, I'll say Hazias, he's actually calling for and reiterated his soft landing call. He sees the chance of a recession in the next 12 months only 15%. He does think that we will have the first rate cut in June and to only expect more rate cuts if the job market weakens more than expected. He did talk about the commercial real estate market. Lots of people are pointing at it. According to Jan, and again, Goldman Sachs, the office sector is too small of an industry to create a recession on its own. There's a lot of, the economy is very complex, and office is just frankly not big enough to cause a recession, unlike single family homes back in the Great Recession. So that was Jan from Goldman Sachs. Where's Vanguard? Vanguard is out saying that they are adjusting their economic forecast for the year. They basically raised their GDP expectations from 0.5% to 2%, and they've lowered their unemployment call from 4.8 to 4%. They have no recession in 2024 as their base case. So again, folks, it'd be very interesting to see what the Fed presidents have to say again at 11:30. We are going to be obviously going over that tomorrow. But yes, are we going higher? Are we not cutting? What is going on? It'll be very interesting today. I want to talk about Las Vegas real estate agents real quick. I've had some conversations with Omar and Beth, weekly guests on the show, and we were talking about the NAR settlement. We've talked about how the home buying process can fundamentally change over the next 12 to 24 months. What I want to do, because again, we're doing a Buying Vegas show on this channel, I want to offer a 1% bonus to any Las Vegas real estate agent that brings me a deal with seller financing. So folks, if you need to understand how to pitch seller financing, you need to understand when your clients can say yes to seller financing, feel free to reach out to me. We'd love to have that conversation. But yes, I'm saying right here, right now, so you have receipts. If you bring me an opportunity with seller financing and we close, I will give you a 1% bonus for representing me. That's on top of whatever you will get from the seller. So again, I want to incentivize agents, buying agents, to do the work, to understand how to help me find great deals in Las Vegas. And today, given prices, it is very likely that we're going to do some seller financing. So hey, why not encourage what you want? And I will give you that bonus. Next up, let's talk about average versus median, just so we can understand the difference. So let's talk about average net worth for somebody that is 35 years or younger. Average. The average net worth today is $76,300. Now, what do you think happens to median? Do you think the median is higher or lower? Hey, Roldan, how you doing, buddy? Thanks for the super chat. I appreciate it. Just so you know, Roldan, your package should go out today. I should be able to get to the post office and mail your shirts out today. So that should be coming. So again, median. What do you think? You think median's higher or lower? Well, folks, the median net worth of a 35-year-old or younger is $13,900. Average, 76,000, median 13. Folks, not a lot of people understand. They just talk about averages and all these things, and they treat them like they're the same. They are absolutely not. Average is a summation of all the numbers divided by the number of units, right? If you have 10 people, you add them all up, divide by 10. Median is the number in the middle. The problem with average is you have some extremes, right? There are billionaires, I'm sure, that are 35 years or younger that skew this number, right? So you really have to understand median versus average. And again, we're talking about net worth here, but this could be home prices, this could be transactions, it could be all of these things. A lot of the economic data out there gets messed up when you talk average or median, and we really need to understand what it is. So again, I thought that would be interesting. Just for fun, let's talk about 45-year-olds to 54, so about a decade. 45 to 54. The average net worth, $833,000. Not bad. The median, $168K. So the average is about 4 or 5x the median. So again, folks, understand what is going on out there. So again, folks, I guess the last thing to talk about, I do not know if you happen to be a Chipotle stock investor, but if you are a Chipotle stock investor, I have good news for you. Well, I don't know. Hopefully you think it's good news. You are about to have a lot more shares. I think Chipotle announced today that they are going to do a 50-to-1 stock split. 50-to-1. 5-0. That is a healthy stock split. I believe this is the first stock split for Chipotle. But again, enjoy. 50-to-1, folks. Alrighty, that is the daily financial news. I look forward to talking to Anna Kelly today, Adrian Hernandez, Bo, Matt the Mortgage Guy, and Bo Eckstein. I hope you have an amazing day. Fed day, Fed day, Fed day. Take care of yourself. Be well. Don't forget to do the work. And of course, I am wearing this shirt that goes off the website. Cash flow over everything. Get yours. Get your favorite color. It's only available for a few more days. And then lastly, I almost forgot. We got to congratulate somebody closing on 6 duplexes. That's a lot. Somebody closing on 6 duplexes. Craig, congratulations. You did some work with Convoy Home Loans. They helped you out. You've got 6 cards going out in the mail today. Congratulations, Craig. 6 duplexes, 12 units. Nice work. Keep doing the work, folks. Buy box, all this stuff. You know what to do. Bye.